Hello everyone, and thank you for joining us today. In this session, we'll be introducing our new proven accounting non-WIP accounting method. Over the years, PSA has worked a lot with the restoration companies, and we found that not every organization has the same accounting needs. Some companies have a dedicated accounting team and established month-end procedures that make the proven standard WIP process the right choice. Others have a much simpler accounting staff or are simply looking for a simpler accounting workflow while still maintaining complete job costing. Non-WIP was developed to give organizations another accounting method that may better align with their existing accounting practices and business needs. Organizations looking for simpler accounting workflow, including many companies transitioning from QuickBooks or other accounting platforms that do not use WIP processing. Throughout today's session, we'll discuss what non-WIP is, how it works, who it's designed for, and what you should consider when deciding if it's the right accounting method for your organization. Before we begin today's session, let's review a few housekeeping items. All attendees have been muted during today's session to cut down on background noise. Your videos are automatically turned off during the session to avoid any distractions. And this session's recording will be available via our PSA Help Library in addition to our company's YouTube channel. Any questions you have during today's session will need to be directed to our PSA support team, which can be reached at support@canamsys.com. Here's what we'll cover during today's session. We'll begin with an overview of accounting methods available in Proven Accounting, including standard WIP and non-WIP, so you understand where the non-WIP accounting method fits. From there, we'll take a closer look at non-WIP, who it's designed for, and the types of organizations that are best suited for this accounting method. Next, we'll review the basic configuration for non-WIP, including your revenue and cost of goods sold setup. We'll then walk through how transactions are posted, including how revenue and costs flow through the general ledger. After that, we'll look at the impact non-WIP has on your financial reporting and discuss what changes and what doesn't. And finally, we'll wrap up by answering some of the most frequently asked questions we receive about the non-WIP accounting method. So let's get started. Non-WIP is not simply a feature that can be turned off and on. It's one of the accounting methods available within Proven Accounting. Today, Proven Accounting supports 3 job accounting methods: standard WIP, completed job, and our non-WIP. This comparison provides a high-level overview of how the 3 accounting methods differ. Standard WIP recognizes revenue and costs throughout the life of a job using the Proven WIP process. The completed job method recognizes revenue and costs only when the job is complete. The non-WIP recognizes revenue and costs as transactions are posted, eliminating the need for monthly WIP processing. We'll discuss each of these concepts in more detail throughout today's session, but for now, the important takeaway is that each method recognizes revenue differently and is designed to support different accounting requirements. If you're implementing Proven Accounting for the first time, you'll choose the accounting method that best aligns with your company's accounting practices. If you're already using our standard WIP or the completed job WIP, non-WIP isn't necessarily something we recommend changing to simply because it's available. Each method serves a different purpose, and changing accounting methods requires careful consideration of how your company recognizes revenue. Before we look at non-WIP, it's helpful to understand the purpose of the standard WIP accounting method. In standard WIP, job costs are initially recorded to a work in process asset account rather than being recognized immediately as an expense. As work is completed, the WIP process recognizes both revenue and costs based on the progress of the job. The purpose of this method is to better match revenue and expenses within the appropriate accounting period, providing financial statements that reflect the progress of work performed. Because of this, the standard WIP requires additional month-end processing, including running the WIP calculator and the WIP revenue process before financial statements are finalized. For many organizations, this process works very well. However, not every contractor has the resources or accounting requirements necessary to maintain a formal WIP process. Now let's take a look at the non-WIP accounting method. Unlike standard WIP, non-WIP does not accumulate job costs in a work in process assets account, or require a separate WIP process to recognize revenue and costs. Instead, revenue and costs are recognized as transactions are posted. Job costs are posted directly to their assigned cost of goods sold accounts, and revenue is posted directly to the appropriate revenue account. Because there is no monthly WIP process, there are no WIP calculations, WIP journal entries, or WIP revenue processing required before your financial statements are complete. For many organizations, this means they can implement proven accounting while continuing to use an accounting methodology that doesn't require work and process processing. It's important to understand that this difference in accounting methodology can produce different financial results than a WIP accounting method, particularly for jobs that span multiple accounting periods. For example, imagine a job begins in June, but it isn't completed until August. With the non-WIP accounting method, revenue and costs are recognized as invoices and costs are posted. With the standard WIP accounting method, revenue and costs are recognized through the WIP process throughout the life of the job. As a result, the timing of when revenue and costs appear on your financial statements may differ between the two accounting methods. Even though the same job activity is being recorded over the life of the job, both accounting methods record the same business activity. The primary difference is when revenue and costs are recognized. Neither method is inherently better. They are simply different accounting methodologies designed to support different accounting and reporting requirements. Although the accounting method changes, your day-to-day operations remain very familiar. You'll continue managing jobs, tracking job costs, entering time cards, processing vendor invoices, invoicing your customers, and reviewing job profitability. The primary difference isn't how your team works. It's what happens after those transactions are created. Instead of simply exchanging information between your job management and accounting systems, those operational activities become a part of a single accounting workflow designed specifically for proven jobs. For organizations that don't currently use work in process accounting, non-WIP provides a familiar accounting methodology while allowing you to take advantage of that deeper integration between operations and accounting. Rather than changing both your accounting platform and your accounting methodology during your implementation, non-WIP allows many organizations to adopt proven accounting while continuing to use an accounting approach you're already familiar with. This allows organizations to benefit from an accounting platform designed specifically for proven jobs while minimizing the amount of change required during implementation. As a result, your operational and financial information remain aligned, giving you a clear and accurate financial picture of every job. So who should consider non-WIP? Non-WIP may be a good fit for you if you want to simplify your accounting workflow, you don't require monthly WIP processing, you have limited accounting resources, or are implementing proven accounting for the first time. However, standard or the completed job WIP may still be the better choice if you already have an established WIP process, you require formal WIP reporting, or have accounting policies built around WIP. It's important to understand that non-WIP is not intended to replace standard or completed job WIP. If your company is already successfully using a WIP accounting method, we would not generally recommend changing simply because non-WIP is available. Existing WIP companies have active jobs, work in process balances, established revenue recognition practices, and transitioning to non-WIP is an accounting conversion, not a simple setting. Non-WIP is primarily intended for new, proven accounting implementations, organizations choosing their accounting method during implementation, and companies intentionally changing their accounting methodology in consultation with their accounting professional. If you're unsure which accounting method is right for your business, we recommend discussing the decision with your accountant before implementation. During implementation, your company will be configured to use one of the accounting methods available in Proven Accounting. For organizations choosing non-WIP, the accounting version is configured as non-WIP. Because changing the accounting method affects how revenue and job costs are recognized, this is a non-user configurable setting. It should only be changed by a Proven Accounting support team member as a part of the implementation or planned accounting conversion. Once the accounting method has been established, the remaining setup is simply ensuring your revenue and cost of goods sold accounts have been configured within your chart of accounts and are ready to support your job accounting. Now let's take a look at the revenue and cost of goods sold setup. I've combined the revenue and cost of goods sold up into a single section because they really work together. As shown on this screen, revenue accounts are created in your chart of accounts under the income account category, while cost of goods sold accounts are created under the cost of sales category. These general ledger accounts provide the foundation for how revenue and job costs are recorded in the financial statements. Once those accounts have been established, they are mapped to your job types. When transactions are entered, Proven Accounting uses those mappings to automatically determine which revenue and which cost of goods sold accounts should be used. For most organizations, this configuration is completed during implementation and typically requires very little ongoing maintenance unless new job types or general ledger accounts are added. Now let's look at what actually changes when a revenue transaction is entered. From a user's perspective, the workflow is virtually identical. You still create an invoice, you select a customer, and you associate it with the appropriate job. The difference happens automatically behind the scenes. In this example, notice the account ID field. With the non-WIP accounting method, once a job is selected, the system automatically populates the revenue account assigned to that job type. In this example, that's revenue account 42201. Nothing additional is required from the user. There are no extra steps and no different workflows. The accounting method simply determines which general ledger account is selected automatically. Under a WIP accounting method, this same transaction would instead default to the WIP balance of deferred revenue on the balance sheet account. With non-WIP, revenue is recognized when the transaction is posted, so the revenue account is selected immediately instead. This is one of the key differences between the two accounting methods, and it's completely automatic from the user's perspective. The same concept applies to costs. Whether you're entering a vendor invoice, purchase order, credit card charge, or another job-related cost, the user workflow remains the same. You simply enter the transaction and associate it with the appropriate job. The difference again is the account ID that is selected automatically. In this example, the transaction has been assigned to the material job category. Because this company is using non-WIP accounting method, the system automatically selects the general ledger account of 51001, the cost of goods sold account configured for materials. Nothing additional is required from the user. The job category determines which cost of goods sold account is selected, and the system updates automatically. With a WIP accounting method, This same transaction would instead default to the WIP balance work in progress balance sheet account. With non-WIP, the cost is recognized when the transaction is posted, so it is recorded directly to the appropriate cost of goods sold account instead. Just like revenue, the workflow doesn't change, the accounting treatment does. While we've used an invoice and a vendor invoice as examples, this same posting logic is applied consistently throughout proven accounting. The workflow your users follow remains the same. The accounting method simply determines which ledger accounts are used behind the scenes. So what does this mean for my financial statements? The biggest question we receive is usually about financial reporting. The answer is yes, the financial statements will look different. Under the non-WIP accounting method, revenue is recognized as revenue transactions are posted, and costs are recognized as cost transactions are posted. There's no accumulation of activity within the work and process accounts awaiting for future recognition. As a result, you'll notice one of the biggest differences is on the balance sheet. Because non-WIP doesn't use work in process accounting, you won't see WIP asset or WIP revenue accounts carrying balances from month to month. Instead, revenue and costs flow directly to the income statement as transactions are posted. It's also important to understand what doesn't change. Your income statement will still contains the same revenue and the same cost of goods sold accounts. The accounting method simply determines when those accounts are updated, not which accounts are used. Non-WIP changes the accounting treatment, but it doesn't remove the job costing tools contractors use to manage their business. Your operational reporting remains the same. You'll continue to have access to job cost reports, job profitability reports, revenue tracking, cost tracking, and your job analysis reporting. Whether your company uses a standard WIP, the completed job method, or the non-WIP versions of accounting, Proven Jobs continues to capture the same operational data. The accounting method only changes how activity is reflected in your financial statements. Your visibility into job performance remains unchanged. Before we wrap up, let's address a few common questions. Will I still be able to track job profitability? The answer is yes. Non-WIP only changes when the revenue and costs are recognized to the general ledger, not how job information is tracked. You'll continue to have access to the same job costing, job profitability, revenue tracking, cost tracking, and operational reports available with the other accounting methods. The primary difference is that revenue is recognized when customer invoices are posted rather through the WIP process. Does non-WIP mean cash basis reporting? No, these are two completely separate concepts. Non-WIP determines when revenue and costs are recognized for job costing. Cash basis reporting determines how financial statements are presented based on payment activity. A company can use non-WIP with either accrual or our cash basis reporting. Can I convert an existing WIP company to a non-WIP? Technically, yes, but it should be treated as an accounting conversion, not simply a software configuration. Companies already using the standard WIP or completed job method typically have existing work and process balances and established revenue recognition practices that must be addressed before making a change. For that reason, we generally recommend that companies already using WIP successfully continue with their current accounting method. Non-WIP is most commonly selected during a new proven accounting implementation, when an organization is choosing the accounting method that best fits its business. Can I upgrade to a WIP accounting method later? Yes, absolutely. One of the advantages of choosing the non-WIP accounting method is that if your business grows and your accounting needs change over time, you can transition to a standard WIP or a completed job accounting WIP method in the future. When you're ready, simply contact our support team at support@canmsys.com and we'll work with you to make that change. Unlike converting from an existing WIP accounting method to a non-WIP, moving from non-WIP to a WIP accounting method does not require any work in process conversions. What does change is how revenue is recognized. With the non-WIP accounting method, revenue is recognized when the customer's invoices are posted. After moving to a WIP accounting method, revenue is recognized through the monthly WIP process, allowing revenue to be earned as work progresses over the life of the job. This provides organizations with the flexibility to start with a simpler accounting workflow today and adopt a WIP accounting methodology later if their reporting or accounting requirements evolve. Let's recap today's session. Today, we introduced non-WIP, the third accounting method available within Proven Accounting, along the standard WIP and the completed job method. Non-WIP was designed for organizations looking for a simpler accounting workflow while maintaining complete job costing and profitability reporting. With the non-WIP accounting method, revenue is recognized as customer invoices are posted, and costs are recognized as job costs are posted, and the monthly WIP processing is no longer required. Although the accounting methodology changes, your day-to-day workflow and operational reporting remain exactly the same. For organizations implementing Proven Accounting for the first time, non-WIP provides another accounting option that may better align with your business practices and accounting requirements. For organizations already using standard WIP or the completed job method successfully, changing accounting methods should be carefully evaluated, as it is an accounting decision rather than simply a software configuration. Thank you for joining us today. We hope this session has given you a better understanding of where the non-WIP accounting method fits in with Proven Accounting, and it helps you determine whether it's the right accounting method for your organization. If you have any additional questions, please contact us at support@canmsys.com. Thanks and have a great day.